Hello and welcome to the final lesson of our Finance 101 class. For those who have watched every one, congratulations. We appreciate you. I know that our viewership has dropped over time. I think people have gotten, more busy as the quarantine has let up a little bit, and maybe some have gotten a little bit bored. Maybe some had a lot of good intentions and just had other things come up. But we appreciate anyone who's watched any of these. We hope that they've been useful and that you've learned something from them. So, but yes, for those who have participated and watched all classes, thank you. I commend you, and I hope that you feel you have better control and understanding of your finances from this. So, our lesson today, the final lesson, is on insurance, and it's typically not the most enjoyable topic, but we'll see how this goes. So we'll talk a little bit about kind of some, I guess, a little bit on some risks that teens face, but not so much that. Mostly we're going to just talk about different types of insurance, why it's important, how you buy it. But I think for teenagers, probably the biggest one that you will face is auto insurance. So we'll talk specifically about that. Obviously, health insurance is another big one. Dental insurance for those who get a lot of cavities or need braces, but the focus will be a little bit more on auto insurance for that part. So as we think about risk and disasters, typically insurance is bought to kind of help protect a person and share in a risk that they might have. Oftentimes, when you think of insurance, you might think of big disasters, fires, burning down houses, tornadoes, hurricanes. Recently, a very, very destructive hurricane that came through was in 2017, August of 2017, and that was Hurricane Harvey. And Hurricane Harvey kind of came up into the, I guess, Gulf of Mexico and hit Texas and Louisiana. Right outside of Texas is where it really hit the hardest. So there's estimated total losses from that disaster of about $125 billion. That's a lot of money. So think about that. If you total up all of the houses that were destroyed, cars that were destroyed, businesses, business loss of income, all of those things accounted for $125 billion in losses. So it's a lot of money, right, that was passed down to, insurance companies and other insurers. The primary damage that was caused by Hurricane Harvey was actually flood. So there was a ton of rain that hit in the Houston metro area, and that led to rivers that overflowed and just took out, tons of neighborhoods and houses. So anyway, that's an example of a disaster that happened recently. Fortunately, I think in most cases, people had insurance on these things and were able to be covered, but not always. So we don't want to buy insurance just to cover disasters because there's a lot of other things that are important to insure against, but that's definitely kind of a common one. If you think about kind of the average costs of some issues that might come up for you, let's say you're an athlete and you tear an ACL, the average cost to repair that would be 40,000 to 65,000. A small cavity is up to 160,000. Chipped tooth, 200 to 500, plus the exam fees. For those who need to get wisdom teeth pulled, which many people who are around 18 years old do, the cost of that's around $150 to $400 plus anesthesia. If you dent your car, you're looking at $100 or so. Multiple dents in a car due to a hailstorm is anywhere from 1,500 to 11,000. I know in Arizona we have to replace our windshields a lot. There tends to be rocks all over the roads, and that's $100 to $400 a pop. And then vandalism, claims on average are about 4,500. So imagine if insurance did not exist and you're just kind of going through your day-to-day life, you get injured in sports, you have a cavity, and someone runs into you in your car. That's a lot of money that you'd have to spend. And so, thankfully we have insurance for a relatively small amount of money. You can buy insurance to help cover and share in these expenses. So when you think about risks that you are insuring against, well, just risk in general, there's kind of four ways to manage risk. You can avoid risk. So an example of that is if you feel like the risk of flying in an airplane is too great, if the plane crashes, you're pretty much going to die. Then to avoid that risk, you can just not fly. So that's an example of avoidance, just completely avoiding it. You decide not to get a driver's license because you think it's too scary to drive. You are worried about tearing your ACL in football, so you just don't play football. All right, so that's an example of avoidance. The second thing you can do is just to reduce the risk. With reducing the risk, an example would be fire sprinklers. If you go into like buildings, commercial buildings, and if you look up on the ceiling, you'll see little sprinklers up there. And so the owner of that building is not avoiding fire. If they wanted to completely avoid the risk of fire, they just wouldn't buy the building. But they're willing to accept that that is a risk. And so to reduce that risk, they put in a sprinkler system. And now if there is a fire, their hope is that that fire will be much smaller, and therefore it reduces their loss. The third option is just to accept it. It is what it is. There's risk in kind of everything that we do, and so for many people, they just accept the risk, or basically, self-insure. An example here on this, I didn't write it down, but if you've ever purchased something like a TV or a computer, even on like if you buy it on Amazon, a lot of times it will ask if you want to have like insurance on the product, right? Or even an iPhone or an Apple Watch. You can go and you can buy the Apple protection plan, whatever it is. So if you feel like, it's okay, I know that I might drop my phone and it might crack the screen, but I'm willing to accept that risk, and so you don't buy that protection plan, then you are just accepting the risk and self-insuring. If something happens, you're planning on just paying for it yourself. And then the final one is sharing the risk, and that is what you use insurance for. So, if you own a house and your house burns to the ground, then you pay a certain portion of that rebuild, and the insurance company pays the rest. So you're sharing in that cost. In order to get insurance on something, it must be insurable. The risk needs to have certain qualities to be considered insurable. The first thing is an insurable interest. And so if you own your car and you take your car and you're driving it to work, you obviously have an interest in that car, right? It's important to you to have that car. You need it. And so you have an insurable interest in there. You can't go out and buy insurance on your friend's car and you not drive it or anything like that, but just say, I'm going to have insurance on my buddy's car, and if he crashes it, I'm going to make money. There would be no insurable interest in that example. Numerous, so these risks need to be risks that happen often. If it's just kind of a one-time thing, there's no way to insure against that. So insurance companies look at like how often they have these perils or these things that cause loss, and they can run numbers and determine what the average cost is going to be to insure somebody, and then they back that into what it would cost the insuree, the person buying the insurance, to pay. So there needs to be numerous reoccurring losses for it to be considered an insurable event. There needs to be a specific loss. So they need to be able to, the insurance company needs to be able to measure, what it is that was lost. So your house burned down and it's a 3,000 square foot house, so it's going to cost X amount to rebuild. They can specify that loss amount. It needs to be unintentional and unexpected. So that's an important one. You can't go put insurance on your car and then go purposely crash it and collect insurance. You could try to do that, but it's fraudulent. So must be unintentional and unexpected. Reasonable costs, it can't be something that's just way too expensive for the insurance company to insure. And then estimable, so they need to, again, be able to estimate how many losses there will be on average and what that cost will be. Okay, so if it meets these criteria, then you can probably insure it. Okay, so what types of insurance are there? Auto, talked about auto. Most of you on this call, I think, are old enough to drive, and you probably have insurance. If you crash your car, someone breaks into your car, if a tree falls over on top of your car, all those things then would be something that you could call your insurance company and have them pay to fix it or replace it. Property insurance, same basically thing as auto insurance, but this would be an example would be like your house. So if your house burns down, or if there's a storm that comes and blows the roof off of it, things like that is insured through property insurance. But it can be boats, any other kind of just personal property that you own that can be insured. Life insurance, with life insurance, you're actually insuring a person. If I were to die, and now my income is taken away because I'm no longer alive, my wife would suffer from that. So she has an insurable interest in me and could therefore get a life insurance policy on me with her as beneficiary. All right, so that's how that works. You buy insurance with a certain dollar amount. Let's say it's $1 million of insurance, and if something were to happen, I get in a car crash and die. My wife contacts the insurance company, provides them documentation of my death, and then they will send her a check for $1 million. Now that $1 million can be used for her to spend and live her life in a way that she could have done if I was working. All right, so that life insurance is meant to replace the income of somebody else. Again, going back to insurable interest, I don't have an insurable interest in my neighbor down the street. So if I called an insurance company and I wanted to get an insurance policy of $5 million on my neighbor, they would probably wonder why. If my neighbor dies, how does that impact me? Okay, so they might get a little bit worried that I was going to want to take my neighbor out and try to cash in on the insurance. But so that's life insurance. Disability insurance. If you become disabled and can't go to work, so let's say you are in a car accident and it doesn't kill you, but you are in the hospital for 5 months. And maybe it caused enough damage, brain damage or whatever, that you could no longer function in the career that you did. Disability insurance comes in and pays if you are disabled and unable to work. All right. Health insurance, health and dental. A lot of you are probably familiar with that. If you go to the doctor, you break an arm, most of you probably have health insurance. And so the health insurance company will pay a good deal of those medical bills. Without it, you'd have to pay 100%. So most people have health insurance unless you're very, very rich and self-insure. Dental is another one that's quite common, but some people don't have dental. But dental insurance, it says in the name, it covers dental costs. So if you go to the dentist and you have a cavity that needs to be filled, then you would maybe pay a small amount. The insurance company would pay the rest. So Typically with dental insurance, kind of interesting note, but the insurance company will pay 100% of just your routine visits to the dentist, your cleanings and checkups, because they want to encourage you to go. If you go to the dentist often and you get cleanings, then you'll have fewer cavities, you'll have, a lower chance of having a rotten tooth that needs a root canal, and those things are all expensive for an insurance company. So it's a lot cheaper for them just to pay 100% of your office visits, knowing that you're getting checkups, and then their other higher cost items go down significantly. The final one's a little more confusing, but it's an umbrella policy. And that covers liability across kind of everything that a person would own. So for example, on my homeowner's policy, my property insurance for my house, I have on there a liability policy. And what that means, if somebody were to slip and fall on my property and crack their head open and they had to go to the doctor or the hospital, get stitches and whatever, they could sue me and say that I didn't have my walkway lit up properly or whatever. And so that's what's called liability, a liability claim, where I didn't have any damage to my actual house or the property, but I potentially am liable for somebody's injury. And so liability insurance is important to have. You have it in your auto and you have it in your house and maybe some other things. So what an umbrella policy does is, it's, as the name says, it's an umbrella, so it just covers everything with additional liability. Okay, so with my car insurance, I have a certain amount of liability coverage. And let's say in my accident that I have, the damages exceed what I have auto insurance for. My umbrella policy now comes in and pays in extra towards that. So if somebody slips and falls on my property, I've got my property insurance liability coverage and I've got my umbrella policy. If I have a boat and somebody's out water skiing behind my boat and they get injured and they say that it's my fault because of whatever reason and they sue me, not only do I have my coverage for my boat insurance, but I've got my umbrella policy. Okay, so that's what an umbrella policy is. It's pretty important for people to have that, especially as you accumulate more net worth and investments and assets, because you become a higher target for lawsuits. Unfortunately, it's sad but true. So, and umbrella policies are not very expensive to get. Let's look at some terminology with insurance. Some important terms. Premium. The premium is what you pay for your policy. All right. So if I'm going to buy a life insurance policy on myself, and that policy costs me $100 a month, that $100 is my premium. $1,200 a year, $100 a month. That is what I'm paying to enter into this agreement or contract with the insurance company to give me life insurance. Okay, so it's called premium. Premium is what you pay for your auto insurance, health insurance, whatever you pay out of pocket to basically have that policy in place is called the premium. A claim is when there's an insurable loss. Okay, so if you get in a car accident and you call the auto insurance company, you're filing a claim. You're telling them that I was in an accident, I need you to pay. The deductible is the amount that the policy owner has to pay before the insurance company will come in and pay. So let's say you have an auto policy, and you have a $1,000 deductible, and you go and you crash your car, and your car is going to cost $5,000 to repair. So the insurance company then would look at it and say, okay, it's $5,000 to get your car back to where it was before, and your deductible is $1,000, so we will write you a check for $4,000. So the insurance company writes you a check for $4,000. You have $1,000 of your own deductible. That's $5,000 total, and you go and you fix your car, and it's back to how it should be. So the higher the deductible, the more risk that the person is taking. So if my deductible is $2,500 and I get in that car accident, now I'm taking on half of that risk, and so it's cheaper for that insurance because the insurance company knows, number one, they're going to pay less out of pocket for them to make the person whole. And number two, there's a lower chance of me filing a claim to them if my deductible is higher. If my deductible is 2,500 and somebody just backs into my car and dents the back fender and it's $1,000 to fix, I'm not going to call my insurance company because I've got a $2,500 deductible. It's only going to cost $1,000 to fix. I'm going to have to pay for it all anyway. So the insurance company knows that they've got kind of more room to play. They're really only insuring against a bigger loss item, which statistically the odds of that happening is lower. So anyway, so that's how that will work. The deductible, higher deductible, lower premium, but higher risk to the individual. The lower the deductible, the higher the cost premium, and the less risk that you have. Co-insurance is the amount that the policyholder will pay next to the insurance company. Is very common in like health insurance. So let's just say you have a deductible of 1,000 and you pay your 1,000, then they might have an 80-20 co-insurance on top of that. And so you then would pay 20% of the cost and the insurance company would pay 80. So let's say there's, you go to the doctor and you have something pretty severe happen, and it's a $10,000 cost to make you whole, and you've already hit your deductible. Now, if you have an 80-20 co-insurance, you would have to pay an additional $2,000, and then the insurance company would pay the $8,000. Okay, so that's how it works. It's pretty common in health insurance. With that, though, there is an out-of-pocket maximum. And what that means, that's the maximum amount that a individual, that the policy owner would have to pay in any given year. So maybe it's $5,000 for a health insurance. So now, you come in, you pay your deductible, and then you pay your co-insurance. Once you hit that out-of-pocket max, then the insurance company will pay 100% of the rest. So that's how out-of-pocket max works, and it's typically really only found in health insurance, but it's important to know that. So how do you get covered for insurance? So first you submit an application for insurance. Depending on what kind of insurance it is, they ask you questions. It's auto insurance, they want to know, did you buy the car? Did you finance it? Did you pay cash for it? What year is it? What's it worth? How many miles do you drive? What's your driving record? That kind of stuff. If you're approved, then the insurance company will set certain coverage limits and conditions. Okay, so they approve you for this auto insurance and they say, okay, you're approved up to $50,000 in losses, or whatever it is. And then, so that they give you those policy limits. And then in addition to that, they tell you if there's any exclusions. So for example, your car, if it's flooded, that might be excluded. So let's say your car is parked next to a river, and there's a big monsoon and the river overflows and it floods your car, and you call your insurance company to file a claim, they might say, no, I'm sorry, but that's excluded from your policy. It was a flood. Okay, so when you get insurance, you want to look through and see what the coverage is, and what any exclusions there are. Okay, for a house, it's kind of weird, but like terrorism or war, those things are usually excluded. So fortunately, knock on wood, we don't typically have to worry about those things where we live. But anyway, you want to pay attention to these things and understand what the exclusions are. Once that's in place, then you make regular premium payments to keep the coverage. So maybe it's a monthly payment or once a year or every 6 months, whatever is agreed upon, you make those payments and you're insured. Okay, so you applied, you are approved, you understand the terms, and now you start paying for it and the insurance is in place. So then if you have a loss, you get in a car accident, what do you have to do? You file a claim where you describe kind of what happened in this event. The insurance company will then send out like what they call an adjuster out, and they will come out and maybe investigate. They'll look at things and determine, um, is this the correct amount of damage? Um, was this really an accident? Whatever it is, the claims adjuster will investigate that and then report it back to the insurance company. And then if the insurance company if they approve the claim, then they will write a check to the insurance owner. Okay. If you have multiple claims, sometimes even one claim, insurance costs will go up because insurance companies will now look at you and say, this is a guy that likes to file claims. We need to charge a higher premium. So that's something to keep in mind. Really, anytime you do file a claim, you got to look at it and say, okay, is it worth it? If I'm only going to get $600 from the insurance company, but now my rates are going to go higher. Is it worth it, or should I just bite the bullet and not use the insurance company? So those are some things to consider. So because a lot of you are teenagers, teenage drivers, let's look at automobile. So with automobile coverage, what is covered? Medical costs due to physical injuries. So um, medical payments to the policy owner in the car, to passengers, or to people in the other car. Really, any physical injury is covered by your insurance, assuming you're at fault. If you're not at fault, then you would want to go to the other person that caused the accident, and their insurance would cover your injuries if they're insured. If they're not insured, then usually your policy will have an underinsured or an uninsured provision in there where then your insurance would come in and pay for it. But it will cover costs of physical damage. It'll cover cost damage to other property. So it can be any kind of damage. Let's say you get in a car crash, you run a red light, you hit a car, and that car, when you make contact with it, it spins you into a telephone pole and it knocks the telephone pole over. So all that damage of the telephone pole, all that stuff would be covered in here, in addition to the vehicle. So repairs due to that collision. Also, really anything like that's not a collision. So let's say we talked about before, you're asleep at night and the wind blows a tree over and it falls over and lands on top of your car and ruins your car, then that damage is usually covered under what's called a comprehensive policy. It's all part of your same auto insurance, but because there wasn't an actual collision involved, it's considered comprehensive. Okay, so as long as that tree wasn't knocked over in an act of war, like we talked about, then that would probably be covered. Okay, so and then there's liability coverage as well that we talked about. So you're covering the injuries to you and also to those others that may be in the other car or passengers. And as it says at the bottom, liability coverage is required in all states, and each states can have like different requirements, but all states require that. So if you really want to, you can buy insurance that only covers liability. So it covers the other person's car, but not your own. Let's say you have a junky car, it's not worth anything, then you could choose not to insure your car for collision and property damage, but you are required by law to have liability coverage. So let's say that you've been in an accident. Here's our kind of some do's and don'ts. Okay, do remain calm. It's really hard to do that. I was 17 years old, I think, and my dad had a 300 ZX, and this car it's a sports car. Back in the day, it was nice. It was a new car, maybe a year or two old. And I grew up in California, and I wanted to go to a LA Kings hockey game with a buddy of mine. And my parents, being awesome parents that they are, they let me take my dad's new car. And I was driving down the road and got in a car accident, and it was really, really difficult and scary. It's hard to remain calm. You're scared, you're afraid someone's hurt, you're not sure if you're at fault or not. But it's important to remain calm. Obviously, seek medical attention if it's needed. Um, Filing a police report is not always necessary, um, but if it's a pretty severe accident, then it's probably worth having the police come out and having a report be filed. Stick to facts always. Um, Once kind of the dust settles, so within 24 hours or so, I would contact your insurance agent, and then and file that claim. So that's important to do. That doesn't need to be done like at the scene of the accident, but very important. You definitely do want to get the driver's license of the other party. Nowadays with cell phones, you can probably take a picture of that driver's license, but definitely get the person's name, their address, their phone number. I would take a picture of the driver's license if you can. Okay. And then also their insurance information. It's required by law to carry proof of insurance in your car, so they should have that proof of insurance. Ask them for that, and get the policy company and the policy number. Okay, so those are all important things to get. If you're the one that caused the accident and it's clearly your fault, don't admit guilt. That's something important not to do. But most likely the other person's going to be wanting this information from you, so you want to cooperate and let them have that. If it's an accident where you're not really sure whose fault it is, then it's probably normal for both parties to exchange this information. So document the details. This is also really, really important. Take pictures. When I was got this accident going to the hockey game, we didn't have cell phones back then. I don't think I had a camera. But take a picture of your car, take a picture of their car, take a picture of kind of everything. One of my kids was involved in she just like backed into a car or something and barely tapped the car, and so she made sure she talked to the owner about it, and she took a ton of pictures. That way, when or if the person called and wanted us to pay for it, we clearly had evidence of what the damage was. So they couldn't go out, take a baseball bat to their car later that night and then come back and say, look, you did all this damage. Okay. So make sure you take a lot of photos, even video now, and document that. And keep kind of everything for future reference. Keep any kind of claim information, photos, all that stuff. Just hang on to it, file it away somewhere. Okay. So those are the do's. But again, most important, obviously, if you don't need medical attention, if you need medical attention, get that. But assuming that's not necessary, most important thing, get the information from the other driver and document. Okay. Those are the two most important do's. What do you want to avoid? Obviously, leaving the scene. Never leave the scene. That's a felony. Hit and run. So don't drive away, even if you feel like you didn't cause it or whatever. Never do that. Sharing too much information, like I talked about, never admit guilt, even if you're totally guilty. Just the insurance companies will figure that out, but don't come right out and say, oh, that was so dumb of me. I saw you coming, but I was looking down at my phone and I was sending a text and then I hit you. Because as soon as you admit that to them and they know that, that's pretty bad, right? So just if something were to happen, you apologize and say, gosh, I'm really sorry this happened. But don't share too much information. You need to share everything with the insurance company later on, but at the scene with the other party, you don't have to say so much. If there's police there, of course you have to tell them what happened. But so don't share too much information. Don't lie. Don't sign anything. So if the person says, writes down so-and-so admitted that they ran a red light because they're looking at their cell phone, signed, and then they want you to sign that. Don't do that, okay? And never falsify anything with the insurance company, okay? So um, let's say, for example, that you had your left fender was dented because your best friend kind of backed his car into you, 6 months ago, and you just never fixed it, and now you get rear-ended by somebody. Um, it's illegal to go and say, well, I also have this fender is also damaged on the left side because that was damaged by your friend 6 months ago. It wasn't part of the accident. So don't falsify your claim on the accident and say, oh, look, it includes this fender over here in the back. Okay, so um, insurance fraud is a big thing, and it's bad. So never do that. It's not worth it. Okay, so been in an accident. Don't say too much. Don't leave the scene. Don't sign or admit to anything, and do ask for information. Do take pictures and video if you can. All right, those are the main do's and don'ts of auto insurance. And auto insurance is kind of the main, probably the main insurance that you'll deal with, initially. So some insurance is interesting. If there's a storm that blows through and potentially damages your house, an adjuster would really need to come out and look at that and see, okay, was this damaged by the storm or was this previous damage? They need to determine really if your claim is legit. If you have life insurance and you die, it's pretty easy for your spouse to prove that you died. They show a death certificate and it's done, right? So there's really not an adjuster. There's no adjuster that will come out to your house and knock on your door and make sure that you're not still alive. So some insurance is just quick and easy to get. Other insurance isn't. One of We have a hotel that we're developing in Alaska as an investment with clients. And about a year and a half ago, we were about 9 months into building this, and it was all constructed. And this is in Anchorage, Alaska, and it was, framed out, all wood, and we were just cruising on this thing. And somebody decided to jump the fence in the middle of the night and light it on fire. And it was a huge fire. You can look it up online, Anchorage, Alaska, Marriott fire. And I think it was in January or something of 2018, I think 2019, 2018. I can't remember 2018, 2019. Anyway, so we fortunately had good insurance on here, but we have been fighting with the insurance company for over a year and a half to collect. And it's just really been a nightmare. The insurance company keeps coming to us wanting information, wanting to verify, the amounts, and it's been a total nightmare. Now it's about a $24 million claim. It's a big insurance claim, and so that's a little bit different than having a $1,000 auto insurance claim, right? Those insurance companies deal with those all the time. They write a check, no big deal. When you're dealing with a $24 million claim, it's a little bit different. So anyway, insurance, it's great. It can be frustrating, but for most people, it's kind of a requirement. Unless you're Bill Gates and you're gonna self-insure everything, it's pretty much a requirement. So that's insurance. It's important in your finances to have the right amount of insurance, but not over-insure, because it costs money to insure. And so definitely protect yourself, but I wouldn't be the type of person that over-insures everything that you have, because insurance companies, they make money for a reason. They know how to price it. And so anyway, I would keep that in mind. All right, so that is it. That's our lesson on insurance. For your assignment this week, I want you to, if you have auto insurance, I want you to take a look at your policy, find out what your deductible is, how much coverage that you have, and just look that over, okay, and understand it better. And then also for health insurance, do the same thing. So what's your deductible, what's your co-insurance, what's your co-pays, review kind of your personal policies, auto and health. If you don't have that, your parents will ask your parents about their policies. So ask them about their policy limits, how much they pay, how much coverage they have, etc. And hopefully your parents can give you that information. If not, just really prod them and say, this is an important assignment for me. And so I need you to go pull up your policy online and look it up, because it's important for everyone to know what they have in insurance. So ask your parents. So when you report back to me, just give me a report on your insurance. You don't have to give me the details, but you can just tell me that, yeah, my parents understood everything about their insurance and they feel very comfortable with what they have, or my parents looked at it and felt like they needed more insurance, whatever. Anyway, you can also ask them about any other insurance policies that they have beyond health and car. Okay, so get some information on health, auto, find out if there's any other insurance they have, and just kind of have a discussion with them on that. If you are a parent or an adult, we have a few on here, just do a self-assessment of your insurance. So that is the assignment. Report back to me. 1 point for watching this, 3 points for completing this. Now, this is our last lesson. I'm so sad to see you go. I feel like it's the last day of school and we have summer break coming up now and everyone's gonna get ready to head down to the beach or the lake or whatever. And that's awesome. If you take some time and you send me an email and put in the subject field, final assessment or whatever, final project, however you want to word it, and email it to me, and just send me over a few things that you learned. You can write up a fancy little report, or you can just send me some bullet points, 5 or 6 bullet points of things that you've taken from these lessons. I don't want them all from one particular lesson. I'd like to hear kind of what you learned about some different things. So it doesn't need to take a lot of time, but if you do that, we'll give you bonus points. I'm planning on kind of leaving this course open for about another week to 10 days. And then from there, we will tally up everyone's scores as far as how much time is spent and the projects that you've worked on. And we will do our raffle. And so hopefully in the next maybe 2 weeks, we should have the raffle winner. So we appreciate you doing this. These classes are going to remain online, so you can come back and watch them at any time. You can have your friends watch them, family, uncles, aunts, grandmas, grandpas, moms, dads, whoever wants to. We will keep these lessons up. So thanks so much for your time. It's been a pleasure. As always, call or email with any questions. Thank you. Bye.